We're jumping straight into BitMine Immersion Technologies today. Everyone's watching the price action, but the real story is the sheer scale of their Ethereum treasury and the staking yields.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds on this one, and trust me, there are some very expensive weeds to get into, make sure you subscribe and hit the like button so you don't miss our next breakdown.
Okay, so let's set the stage. The stock is, well, it's been volatile.
Volatile's one word for it. I've been staring at the chart, and it's trading around, what, $21.16?
That's right.
The 52-week high was $161. I mean, that's not a dip, that's a cliff.
It's a bloodbath if you're just looking at the price tag, absolutely. You'd think they were about to go bankrupt.
Right, but then you look at the assets, and you see a total treasury value of $10 billion.
$10 billion.
So help me make sense of this. How does a company with a $10 billion piggy bank trade at 21 bucks? It feels like the market is broken.
That is the $10 billion question, isn't it? And to understand it, you have to sort of shift your thinking. BitMine isn't really a traditional company anymore.
What are they then?
They've basically become a massive asset manager, a treasury. In fact, they are now the #1 Ethereum treasury in the entire world.
Number one for Ethereum.
Yeah.
And what about overall crypto?
Number 2, they're just behind Strategy Inc.
Okay, so just behind the big Bitcoin player.
Correct. But here's the key difference. Strategy holds Bitcoin, which is, it's digital gold. It just sits there.
Right.
BitMine holds Ethereum. That's more like digital oil. It's productive. It does things. But the market right now is just completely terrified of the volatility.
And what terrified seems appropriate when your stock chart looks like a ski slope. But you're saying there's more to it, that the market is missing the forest for the trees.
I'm saying the market is missing the whale for the waves. Let's dig into the bull case, because the scale here is genuinely hard to wrap your head around.
Okay, let's do it.
It all starts with their moat. And in this case, the moat isn't a patent or a brand, it's just brute force scale.
Can you use numbers?
BitMine holds over 4.3 million Ether.
4.3 million. Okay.
To put that into context for you, that is 3.58% of the total global supply of Ethereum.
Hang on, pause right there. They own almost 4% of the entire network.
Yes, the whole thing. Think about that. It's like one company owning 4% of all US dollars or 4% of all the planet's oil reserves. It's that level of concentration.
That sounds incredibly powerful and maybe a little dangerous from a decentralization standpoint.
Well, that's a whole other debate and a valid one. We can get into those risks.
Yeah.
But from a purely financial view, it's a dominance strategy. And they're not stopping.
What do you mean?
You'd think with the price of ETH down, the stock getting hammered, they'd be, hunkering down, saving cash.
Right. Battening down the hatches for crypto winter.
Instead, they're doing the opposite. They are aggressively buying this dip. In just the last week, they added over 40,000 more ETH.
40,000 in a single week.
In a single week.
That's bold. Where are they even getting the money for that?
They're sitting on a war chest. They've got $595 million in cash just on hand.
Wow.
Plus, they have stakes in other companies. About $200 million in Beast Industries, another $19 million in 8Co Holdings. They have the liquidity, and they're using it to try and corner the market while everyone else is panicking.
So retail is selling out of fear, and these guys are literally backing up the truck.
Precisely. They're not playing for today's stock price. They're playing for their percentage ownership of the network tomorrow. But holding the coins, that's only half the story.
All right, this is where the yield comes in. Staking. Let's bring that down, because I think a lot of people hear the word but don't fully get what's happening.
It's crucial. Unlike Bitcoin, Ethereum is an active network. So think of it like a digital highway. To keep it secure and running, you need security guards, validators.
Okay.
By staking their ETH, BitMine is basically funding thousands of these digital security guards. They lock up their coins as collateral to help secure the network.
And for doing that, the network pays them a reward.
Exactly, a yield. Paid in more ETH. And right now, that yield is generating about $202 million in annualized revenue for them.
$200 million a year. And the margin on that has to be, what, almost 100%?
It's incredibly high margin revenue. It's not like old school mining with massive power bills. This is pure yield. It's like a money printer.
But I saw a note about something called Ambanon. It sounds like a secret project. What is that?
It stands for the Made in America Validator Network, and this is the real growth catalyst.
Made in America. Why does that matter for crypto? Isn't it all borderless?
The crypto is, but the regulators aren't. And neither are the big institutional investors.
Ah, okay.
They want compliance. They don't want their yield coming from a server in some random country. By building Mizan, BitMine is creating a US-based, best-in-class, regulatory-friendly infrastructure.
So it's a safety play to attract big money.
It's a safety play and a yield play. By bringing it all in-house and optimizing it, they can boost their returns. They're launching it fully this quarter.
And what's the projected impact on the numbers?
If they nail the launch, that $202 million in revenue is projected to jump to $374 million annually.
Whoa. So that nearly doubles their high-margin revenue, just from an infrastructure upgrade.
Essentially, yes, it's an optimization. And remember, that's recurring. As long as Ethereum is running, they get paid.
Okay, so that's the bull case. It sounds incredible. Which brings us back to the big question. Why is the stock at $21?
Because, well, looking at the flip side, we have to talk about the risks of tying your entire ship to one anchor.
And that anchor is the price of Ether.
Exactly. The stock is down because the underlying asset is down. Ether is off about 62% from its 2025 highs. And for BitMine's accounting, that's brutal.
This is the paper loss issue, right?
Yes. On their books, they have to report about $8 billion in losses.
8 billion. With a B. I mean, that's a number that scares anyone away.
Of course it does. And it gives them a PE ratio of like negative 24.59.
Negative 24. I mean, Investing 101 says you run screaming from a number like that.
You do, unless you understand what's happening. It's mark-to-market accounting. They haven't actually lost $8 billion. They haven't sold a single coin at a loss.
So it's just an accounting rule that makes them look unprofitable.
It distorts the picture. Operationally, they're cash flow positive from the staking, but the asset depreciation just crushes the net income number on paper.
So the PE is misleading. But the real risk, the concentration risk, that's not misleading at all.
That is the real bear case. Forget the PE. The risk is that BitMine is basically a leverage bet on Ethereum, full stop.
They have no other business. No iPhones, no cloud services.
Nothing. Their entire model depends on the price appreciation and yield of a single asset class. If Ethereum has a catastrophic bug, or if regulators come down hard on staking,
then BitMine has no backup plan.
Their plan B is... there is no plan B. The company's value could go effectively to zero.
Wow. And the market sentiment right now reflects that fear. All the reports talk about pre-market weakness and volatile Mondays.
The mood is fearful. People are worried this crypto winter could become an ice age.
And there's also the MN launch itself. That's not a guaranteed success, is it?
No, that's a major execution hurdle. They're moving billions in assets to a new system. If there's a bug, a security flaw, if they don't hit their yield targets, that whole bull case gets a lot weaker.
So high reward, but very, very high risk.
It's the definition of it. You're buying volatility.
Okay, so let's look for anyone watching this, what are the key triggers to look for in the next 30 days?
I'm watching three things very closely. First, obviously, is the BMNR launch.
Right, we're in Q1, so it should be any day now.
It should be. And when the announcement comes, don't just read the headline. Look for one specific number.
The yield rate.
The composite yield rate. They've guided for 3.115%. If they hit that, it's a huge win. If they miss it, it means the tech isn't performing as promised.
Got it. Check the yield. What's catalyst number 2?
This is more of a macro thesis from Tom Lee. He's calling for a V-shaped recovery in Ethereum.
A sharp bounce, not a slow grind up.
Exactly. His whole argument is based on this divergence between price and usage. The fundamentals of the network transactions, active users are at all-time highs. The economy is booming.
But the stock price of ETH is in the gutter.
Right. And he argues that price always eventually follows utility. So we're due for a snapback.
So the signal to watch for that is what? Just the price of Ether?
I'd watch BitMine's accumulation rate. Are they still buying 40,000 ETH a week? If they are, it means the insiders agree with Lee's thesis. If they stop buying, I have a loaded on them.
Be very careful.
Makes sense. Okay, and the third catalyst, the alchemy of 5%.
This is the longer-term goal. The rumor, which is backed up by their buying patterns, is that the company's ultimate goal is to own 5% of the total ETH supply.
They're at 3.58 now. Why is 5% the magic number?
It's a threshold. In corporate governance, 5% makes you a major activist investor. In a decentralized network, owning 5% of the staking power gives you an enormous say in the future of the protocol.
You become a kingmaker.
You could sway votes on upgrades. It's a huge amount of influence.
So a publicly traded American company could effectively become a governor of this global decentralized network. That's wild.
It's the ultimate paradox. But if you see them accelerate their buying toward that 5% target, it's a massive signal of their confidence. Okay, let's bring it all home. This is a massive bet on the future of finance, trading at a huge discount to its assets, because the market is terrified of volatility.
And it's a liquid stock. 1.3 billion in daily volume. You can get in and get out fast.
So here's the final lowdown. If you believe Ethereum is the internet of money, BitMine is trying to become its central bank. The question isn't just if ETH goes back up, but if BitMine can capture 5% of the supply before it does.
That's the race, and it's going to be fascinating to watch.
Absolutely. We will be keeping a close eye on that MEVA and yield number, so make sure you are subscribed so you don't miss the update when it drops. Thanks for listening to the Easy Money Show, and we will catch you on the next one.